Hey guys, what is happening and welcome to this video. So in this video we're going to talk about fear. We're going to talk about that all-consuming emotion that is fear. You can apply this to real estate psychology, to trading psychology, to market psychology in general. So without further ado guys, let's do this. Alright guys, welcome back. So if you can, please hit that like button. It helps support the channel and it helps videos like these be pushed up to the front page. And the thing is, we need it as small channels. And if you enjoy the content around here, then please consider subscribing if you're not already subscribed, and thank you to all those that are subscribed. So anyway guys, let's dig right into this. So fear. We've all experienced fear. And we all know how much of a consuming emotion that is, how it just clouds everything. And it's such a dark place to be in fear because you can't see any sort of light. It's like you're shut in this dark room and everything is just bad. And you just think things are going to get worse and worse and worse. And that is exactly what fear is. So the thing is, a lot of emotions come before that fear that trigger it though. And I want to be clear about this. So let's say that you buy a stock or you buy a house and you're buying it at an extremely inflated price, and you know at the time you think, oh well, you know, it doesn't matter, I'm not bothered if it falls in price too much, because at the end of the day we need a house to live. This was a good investment for us, or whatever you tell yourself. So anyway, then people go and buy the house, they buy the stock, whatever it is, at this extremely inflated price, but they know deep down that they don't really want the price to fall. And because of the recency bias on when they're buying and the fact prices have always gone up, people think there's nothing that can go wrong there. The thing is, that goes for pullbacks too. So when a stock price pulls back and then people buy, and if it's heading into a downtrend or it's made a top, then that can be a disastrous scenario. So again, people in that position are thinking about the recency bias. They're thinking, hey, you know what? Stocks have gone up for the past 6 months, so that must mean they're going to continually go up. So this sort of mentality bakes fear into the cake, as I like to say, because, you know, the thing is, when people actually do these sorts of things, they don't realize that they are actually baking fear into the cake. You know, those concerns that they have, they are valid, and the thing is, they're not going to go away. They're just going to kind of be swallowed, and they're still going to be there within inside them, and they'll come to roost at another occasion. So the thing is, then when prices start to decline, people think, well, that's okay, and they start to decline to a certain extent, and they're not really bothered. They know that the market fluctuates, and at the end of the day, they think their decision was the right one. So the thing is, then prices continually decline, or the price declines get steeper. So prices start to really go down, and then people start to wonder, you know, what if I get a margin call? What if we can't renew our mortgage? Why are prices going down so much? What's going on there? Well, it's because of high mortgage rates. Well, we have a variable rate mortgage, so how far is the rate going to go up on our mortgage? Or we have a fixed rate mortgage and we've got to renew in 3 years, and what's going to happen? Because we're not going to be able to renew at these rates. Like, so what are we going to do? A lot of people are going to be, all those different things are going to be going round their mind. They're going to be swirling around their mind, and they won't actually do anything. And then there'll be a point where the market takes a breather, it heads into the denial phase and slowly rises a little bit, and people think, that's so much better. And then it starts going down again. It makes the second or third leg down. And that is when those people are extremely worried, because they are thinking, we cannot allow prices to go down. Like, think about it. And the thing is, when you think about how losses work compared to gains, you have to realize that there's a multiplying effect of that. So a 20% loss, you're going to need more than a 20% gain in order to recover that loss. And not a lot of people understand or realize that. And that's the same for real estate as it is for stocks. So the thing is, a lot of people are going to see their down payments wiped out, and it's very, very emotionally challenging when stuff like this is happening. So the thing is, guys, as I know as a trader, holding on to a loss is a very emotional thing to do. It's very, very emotional. It's not an easy thing to do. People think it's an easy thing to do. Even I thought it was an easy thing to do, but it's not an easy thing to do. And the reality is you need to know when to cut your losses, and retail investors do not understand that concept at all. They just hold on to their losses. And that is how they can turn an account that was really, really great. One loss can blow their entire account or wipe out all their gains because they just cannot take a loss. And in a lot of these cases, it's very, very obvious that things are going wrong. Like, think about some of these stocks that are down like 70 to 90%. Like, do you think when it was down like 30%, a lot of people would have been thinking, maybe I should sell at this point, but they didn't because they got greedy and they said, it will just continue to go up. And they were just looking on the days where stocks were up instead of on the days when stocks were down. They weren't looking at any sort of value at all or the fundamentals of the company or why the stock is declining. The thing is, guys, if one of a stock is declining in my portfolio, what I am looking at is why that is happening. Is it just market fluctuations, or is there a fundamental that has possibly changed on the company that I own? You see, you have to think yourself as a business owner, but you don't want to become a bag holder on a business that was completely overvalued when you bought it. And the thing is, people are going to realize this the hard way, especially people who invested in the Nasdaq, because the thing is, the Nasdaq is incredibly interest rate sensitive, and a lot of these companies in the Nasdaq, they're going to go bankrupt. They're not going to be able to survive in the environment that we're in right now. The thing is, there's just a lag factor that happens, so it takes time to all bleed out. But it's just not going to happen. So the thing is, guys, people not taking a loss, it's very, very, very bad. And that is actually part of the reason why fear comes in, because those people who were thinking, it's down 30%, maybe I should sell right now, are the ones that will be selling when it's down 50 to 70%, because they didn't sell when it was down 30%, and now they don't know where the bottom is. They're just scrambling. It's like I said, they've got all these questions that are going around in their head. They don't know what is happening, and it's a big, big issue. So the thing is, guys, you have to remember that these things are happening, they're going to happen, and it's not going to be good. So I would be fully aware of your emotions. You know, anybody who goes and they ask people, is it a good idea to buy right now? Those people are probably going to end up in fear, unfortunately. And you know, when people lose their job as well, that presents a massive amount of fear. How am I going to afford my mortgage? All these things keep swirling around those people's head. And you can see how this all plays out. And then you've got all the people who committed mortgage fraud. Well, again, those people are going to have fear. Oh my God, what's happening? This is not good. Like, what happens if my home equity line of credit gets called in? What happens if my home value goes down below what I refinanced it for? You know, people are just in an insane position that we have never seen in Canada, at least, but has been seen in the United States in 2008. And even there, people are saying, oh, this time is different. It's going to be different this time. Again, we hear this all the time. And when you start to hear people say that, you should know the end is near at that point, guys. So anyway, if you enjoyed this video, please leave us a like, because that helps support the channel. As a small channel, we need that support. And if you enjoyed this video, please consider subscribing, guys, down below. And if you want to be part of the live streams, make sure all your notifications are turned on. Hit the notification bell below. Anyway, guys, thanks for watching. Peace.